Hey gang, welcome back to the Trading Coach Podcast. Got a cool episode for you today. One of the most interesting trading questions that I got. Let's hop straight in. The question says, Akil, it's me again. Just have to ask, there was an institutional trader named blank, I'll leave his name out for you, who says day trading is a waste of time. And big institutions don't even care about chart patterns and indicators, making them pointless to use. He goes on to say that it's all about fundamentals and trading on higher time frames, the daily, the weekly, the monthly. And according to him, technical analysis is for analysts, not for traders. And day traders don't even make money at all. What is your take? And I'm going to attack this question from a few different perspectives. And I want to start off kind of giving my, bona fides or lack of bona fides on the topic. So, although I have managed money in the past before I got into coaching. So if you guys are new to the Trading Coach Podcast and my story is this. I got out of college, was interested in investing, got my feet wet in the stock market, had success in the stock market, went to the Forex market because I thought I could make a lot more money in a shorter amount of time, and it wasn't the case at all. Struggled for a bit, quit 3 jobs, found some mentors, got some training, struggled even more after that, finally turned my situation around, became a consistently profitable trader, realized that you're not going to make as many millions in as quick of amount of time as you think you are, so you have to take your skill of trading and turn it into some type of business. So I went into managing money for others, did that for a little bit, hated it, brought in good money, but hated it, wrecked me and took my love away from trading. Went back to trading as a retail trader, meaning trading my own money. Eventually got into coaching as well, and here I am today. And through those experiences, I got to meet a lot of really cool traders. Being in a highly respected company, I got to kind of bump elbows and rub shoulders, whatever it is, with many let's say individuals that are very high up there. I got some really interesting stories as well. Many I can't disclose because it's going to get people in trouble. But as I told you before, St. Patrick's Day, MMA fight, real fight, we'll leave it at that. Anyway, the fact is, in my experience, although I have never been an institutional trader, I have gotten to speak to a lot of institutional traders, and although they can't tell me all of the secrets of how they do what they do, because there's all type of like non-disclosure stuff, they did give me some general ideas of why the market moves, how the market moves, and the differences between what they do and what the retail traders do. So if we just start off with that, the difference between institutional traders and retail traders, for you guys that are newer or uninformed, undereducated, whatever it may be, think about institutional traders as being big fish, retail traders as being small fish. So retail traders are essentially anyone that trades their own capital, whether it's, you trade your own capital, you trade your own money. Let's just keep it simple as that. Institutions, however, institutional traders are traders that trade and invest the capital of others. So we could be talking about banks, we could talk about mutual funds, ETFs, insurance companies, et cetera. They are the big fish. And it's important to understand that these two separate types of traders are completely different, meaning that an institutional trader has their own strategy, their own agenda. A retail trader has their own strategy and their own agenda. An institutional trader definitely doesn't want to, nor can they act like a retail trader. And a retail trader doesn't really want to, nor can they act as an institutional trader. So it's really not fair that we combine the two. And if you're going into trading with this kind of mindset, like, because of all the stuff out there about smart money concepts and this and this and this, like I have to trade like an institutional trader, I need you to erase that from your mind right away, because that is not true. There are some really cool benefits of being a retail trader and things that we can do that institutions can't. But the idea is not to trade like an institution. We want to be aware of what institutions are doing and the patterns that they create. That way we can take advantage of it. I always think about it like the elephant and the fly kind of analogy, where if you think of institutional traders as being like the big elephant, right? We are the small little fly that's hovering around its tail, going unnoticeable, and our job is to understand when that elephant starts to run, right? Elephants run, right? Run, gallop, whatever they do. When elephants start to move, we want to be there for the ride and kind of catch a little bit of it. Now, I guess while we're on the topic of, kind of trading differently, let me just tell you a little bit of the difference between how institutions trade and how retail traders trade. The main benefit of being a retail trader is that we have the ability to do whatever we want, whenever we want within the market. Again, the market is this big old savanna. The institutions are these big elephants in the savanna. We are that tiny little fly hovering around the elephant's tail. Meaning that we basically go unnoticed, right? This is why I always say, no one cares about you. You're, people that are like, oh, my broker has stopped hunting you. This person has stopped hunting you. No, you are unnoticeable with your very, very small account. No one really cares. And that is a positive because that allows us to operate under the radar. So we take for granted as retail traders the ability to get in and out of a position whenever we want, right? If I want to buy the euro dollar right now, it doesn't matter what type of position size I'm trading, I can do it. If I want to get out right now, no matter what type of position size I'm trading, I can do it. You can buy and sell whenever you want because we are retail traders. Our little coin does not even make a splash or a ripple in the big sea of the financial markets. Institutions, on the other hand, they do. They are trading with so much size that they do not have the ability to just do whatever they want whenever they want. Because if they do, they are actually going to move the market against them. If they move the market against them, that cuts into their profit. And I'll tell you what, institutional traders, although sometimes every once in a while they are wrong, they can't really afford to be wrong. So they have to be right. And because of this, there are many different tactics that they take when it comes to, buying and selling in the market. Just as far as establishing a position, they can't just unload or offload a full position at once. Again, it's going to move the market against them. They're going to get into trouble doing so. So they have to be very strategic and sneaky with their buying and selling habits. And these type of actions can take days up to weeks just to establish a position, right? So what I mean by that is if they want to put on their full size, it's not just like, hey, let's get it all on at once. We got to get a little bit on here, a little bit on there, a little bit on here, a little bit on there. They have to slowly kind of sneak their way into the market without getting caught, right? It reminds me of being a kid and your parents give you a curfew and maybe you're a little bit late and you got to get up to your bedroom and you've got to go up 10 flights of stairs and the old school stairs, they're creaky and you're kind of whoop. Sneak it in, right? You can't just run up the stairs and stomp or you're going to get caught by your mom. You got to sneak. You got to kind of feel out that next, is this the, oh, no, can't step there, right? You're slowly sneaking yourself into the market to get to that ultimate goal. Also, like I said before, they can't really afford to be wrong. So the thing about that is they have to know that they're going to be right before they get their full position on. So there's a lot of probing that happens in the market. There's a lot of testing to kind of see what the reaction is going to be. Where it's hey, I'll put in a test here to see how the market reacts. I'll put in a test there to see how the market reacts. There's actually a cool thing, people sometimes call it manipulation, but sometimes they'll even bait the market, meaning if they ultimately want to buy, they will sell to push price down to a certain level to get the interest of more buyers so that they can actually establish a position and blah, 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 right? Again, it's not manipulation in my opinion. It's just how the market moves. And if you understand the rules of the game, then it is what it is. But there's a lot that goes into being able to establish a position as an institutional trader. And this is why I say retail trading is awesome, because again, imagine the difference between going through that whole type of thing versus just being I'm in, I'm out, I'll see you, right? I actually think we have it better in my opinion. And this kind of goes into the next subject, and I'm trying to break these down to stay somewhat organized, but Trader Coach Podcast mind goes everywhere and just spews from the mouth. They don't care about chart patterns, right? So yes, I would agree with that, right? They don't care about chart patterns in the same way that we care about chart patterns. Now, maybe don't care is a little bit too harsh. They don't trade chart patterns the same way that we trade chart patterns. They definitely care about them, and I'll tell you about that in a little bit. But the interesting fact is this, you may not know this, right? It is the actions, the buying and selling activities of these institutional traders which actually create many of these chart patterns. Right? Did you know? One of my biggest regrets as a newer coach is that I tried to play it super cool, right? I got into coaching. I was young. Again, I was bumping elbows, brushing shoulders. I got to figure out what that saying is so I stop butchering it. But I was talking to like big fish in the industry. And I'm probably like, what? I'm mid-late 20s at this time, probably 20, 25, 26, 27, talking to like these millionaire traders. And you know how you are. I'm trying to, I was the whole fake it till you make it type of thing, convincing myself that I was a great trader. I'm trying to like act like I belong, right? I actually grew up in the music industry, and so I met a lot of famous people during my life. And something that someone in my family always told me was like, hey, like, when you meet these celebs and stuff, just act like you've been there. Don't act like a fan. That's, they're surrounded by fans and paparazzi. Their entire existence, like the thing that they like the most is just being treated like a normal human being. So whenever I did that, I, just play it cool. My wife, on the other hand, man, she's the one like, I gotta get a selfie. Let's take a picture, right? So we're completely different in there. So when I'm meeting these big traders, right, these no names, I'm acting the same way. I'm like, yeah, cool, you trade. Yeah, I trade too. Probably not as much as you, but we do the same thing. A little buy action, a little sell action. You know how it is. And I remember having this one conversation with a trader that traded for a big bank. And he was actually, he was watching, I was running a live room. He was in my live room. I was nervous as hell, right? Imagine this guy, like this big bank guy, looking over my shoulder as I'm doing my thing. And I'm like, dripping confidence and voices cracking, like, cause I'm like, I want to put on my best bit of work in front of him. And I remember having a conversation afterwards. He's like, hey man, I want to talk to you after the room's over. I'm like, oh shoot, man. Like, oh no, I messed up. Like he's gonna destroy me. He's gonna tear apart my trading, my analysis. And I met up with him and he talks to me. He's like, yeah. First of all, like, I like what you're doing. I said, oh, yes, yeah. I mean, I'm like, cool. Yeah. I'll be doing it. Right. He's like, but did you know, like, the same thing you're trading, this is why it's happening. I'm like, what? So we're talking about trading patterns and whatnot. He's like, yeah, let me tell you how this pattern forms. And again, he did it in the most kind of general way possible because he couldn't get back the details. But long story short, he was telling me like, yeah, so when we're looking to enter a position long term, and I'm talking like weeks from now, here's what we do, right? I would buy there, and then I would sell there, and then I'd buy a little bit more there, but then I'd sell there just so no one knows, so that I can buy again right there at the same cheap price I want. Because if I keep buying, it's going to get more expensive, and that's not what I want. And he drew it up on a paper for me. He's like, and you see, when I do this buying and selling right there, does that look familiar? And I'm like, oh crap, like that was the thing I was trading. Like that's what I trade. Like, so you're doing that? Because like, especially with advanced pattern formations, for example, like I never knew why they formed. I know that they form. I know the ratios. I know that they're successful, but I never understood the why because it. And he broke down why the movement, the M and W shaped movement that we see happens because it's the selling and the buying and the selling and the buying. And then boom, the final kind of not kill stop, I don't know what I'm trying to say. The final blow before the market actually breaks out the consolidation. And my biggest regret is that I should have picked his mind more, right? I should have been like, hey, go into more detail exactly why this is because I can have more knowledge. But again, I was trying to play it cool and I was like, oh yeah. That makes sense. Yeah, I understood it. I didn't understand anything he was saying, right? After kind of the basics of I didn't understand any of when he deep dived into the buying and selling habits. I didn't understand any of it. But I was like, yeah, that makes sense. You ever know when you're in a conversation and you're nodding your head and like you're praying someone doesn't ask you a follow-up question? He's like, yeah, that makes sense. I'm like, yeah, I got that. I'm like, please don't ask me a follow-up because I am lying my behind off right now. But it brought a lot of confidence to what I was doing with my trading because now I knew that, although I was trading these harmonic pattern formations, these advanced pattern formations, which at the time, the whole industry was laughing at me, right? The whole industry was laughing at me for, trading these wing things with funny names and blah, blah, blah. It brought confidence to that, but it gave me a better understanding, a better belief, a better trust about not only what I was trading, but why I was trading it. So it's interesting, and that's just one example of a pattern, but it's interesting that, yes, they may not trade these patterns the same way retail traders trade these patterns, but it is their movement that is actually creating these patterns for us to trade. Now, going back to the original statement, like they don't care, I wouldn't put it that far. Again, I qualify it as they don't care about trading it, but they do care about these patterns because, again, it's not manipulation, but institutional traders are very aware of what retail traders and what the general public is doing, right? Again, their job is to get in and out of the market, and they're doing it with lots of size. So in order to get in and out of the market with size, they have to have enough liquidity that they can actually do so. Again, they don't have the luxury of buying and selling and getting in and out like we do. So when you see certain patterns form, right, these patterns are psychological patterns, right? These are nothing more than visual representations of the actions that we as traders, all of us, are taking in the market. And these patterns have existed well before price charts even existed, right? Because again, it is human behavior, crowd psychology, whatever you want to call it. And the interesting thing is that these patterns in us as human beings were very predictable. We know that, hey, if this forms on my chart, this is how people will think. And if people think like this is how people will react. And if they know people are expected to react a certain way, that allows them to pinpoint opportunities where they can get in or out of a trade, whatever it may be. This goes into the whole thing about like stop hunting, where like people complain about stop hunting and I said like, oh, my broker's out to get me. No, it's because people get stop hunted because they put their stop losses at very, very dumb locations, right? Dumb locations where institutional traders no stop losses are going to be, no liquidity is going to be there. And they know that, hey, if I just push it up to that level, I will hit that zone of liquidity and I will be able to do the things that I want to do. And sorry, you are collateral damage, right? And this is why as traders, we need to be aware of this stuff. And we need to be smart about this stuff and not put our orders in dumb places. We need to avoid it. So as you can see, they are understanding and using the technicals, but the fundamentals probably do play a bigger role. And that was the next point that this trader asked. He said, whatever guy said that they use fundamentals and not technicals. First of all, we use both, right? How we use them is going to differ, right? So for me as a trader, technicals are first because I'm a short-term trader, and then fundamentals are second if I'm looking for like a bigger trade, a longer-term trade. When I invest, it's the exact opposite. It's fundamentals first, it is technical second, where fundamentals are what allow me to create my bias, whether I want to go long or short. Technicals are what I use to decide, hey, where is the best point to enter or where is the best point to exit. Institutional traders are certainly using fundamental analysis, right? They're not in and out the markets in 5 minutes. They're not in and out the markets in 5 hours, right? They're holding things for weeks. They're holding things for months in their trades, right? It's a longer term play. And whenever we get into the longer term play, fundamentals are the drivers of that, right? Fundamentals, what do I always say? I forget. I think fundamentals are the driver, technicals are the destination, meaning that technicals will tell you where price action is likely to go. Fundamentals will tell you how it's going to get there, how fast it's going to get there, what route it's going to take to get to that level. So fundamentals are certainly being taken into account first and foremost, and then it's finding those technical levels. Where is the cheapest place that I can get involved to actually establish that position in the market? So it is a little bit of both. I would say that and again, I can't speak for all institutional traders. I've never been one, but I would say that fundamentals probably play a bigger role of the original decision making. But technicals are definitely in play to kind of pinpoint those opportunities. Now to the next point, day traders don't make money. Wrong. That is wrong. And it always makes me question someone's intelligence when I hear them make a statement like this. It's the same thing where it's like, hey, you can't make money trading technicals. You can't make money trading fundamentals. You can't make money this way. You can't make money that way. Like, you can make money anyway, right? If you haven't read it already, there's a great series called Market Wizards. And this was a game-changing book for me. Market Wizards is, and there's what, 3 or 4 editions now? But Market Wizards is a book where Jack Schwager essentially interviews the best traders in the world. And one of the cool things that impacted me when I read it is I went into the book thinking there was one secret trading strategy that I had to find. And once I found it, I would be great, right? So I'm like, okay, let's read interviews of all these great traders and figure out, right? I took notes. What is the one thing they all had in common from a technical perspective, like a strategy? And what was interesting to me is that as I read through, every single trader in that book traded a different way. Like, it was, there were fundamental traders, there were technical traders, there were higher time frame traders, there were lower time frame traders. There was a guy that used the almanac, right? He was stars, moons, seasons, crops. Like, he was using that to be a trader. And it was that specific chapter when I read it where it was like, man, wait a minute, there is no secret strategy. Like, you can do this anyway. It's more about you being good as a trader. versus hunting for this super secret strategy. And I wish more traders knew that. I've been coaching traders for 12 years now, I think, and working with many traders that I haven't coached, but speaking to on the internet. And I wish people invested, let's put it like this. A lot of traders that I see that go on to fail, the reason that they fail is they invest so much time in trying to find the secret strategy, the quick fix, instead of investing that time in developing their skill to be a trader and being successful that way. They're spending more time playing the short game, where if they spent more time playing the long game, they'd be quicker in a shorter period of time. If that makes sense. The longer road to success is shorter than the quicker road, because the quicker road never gets you to success. It just ends up going to a cliff and you fall off and die. Splat, right? That's it. It's over for you. So whenever I hear statements like that, it's completely ridiculous. But let's dive into it and entertain it a little bit, because here is the interesting thing, right? So the statement was like, what, day traders can't make money? I think it was. Let me go back and find the original question. Any day traders don't make money at all. So here's the thing. In general, most traders don't make money at all. So let's start there. Let's go back to that 90-90-90 rule, which isn't an exact statistic, but over the years and speaking with brokers and whatnot, it's pretty accurate. And what that rule says is that 90% of traders will blow 90% of their account in their first 90 days of trading, right? So most traders don't make it. And if we think about the most traders that don't make it, the failing traders, what do they have in common? They're typically looking for two things. One, it's a get rich quick scheme. Two, it's like some type of gambling. And as a gambler, what are we looking for? We're looking for action, right? I told you guys my story in the past about when I used to gamble. I had two ways of gambling, right? I had the way that I did when I was bad and the way that I did when I was good. The way that I did when I was bad is I would go to the table, craps or blackjack were my table, and I would just want as many actions as possible. I'd throw in money here, throwing money there. Come on, baby, let it go. Woo, woo, woo. And then I'd 5 minutes later, I'd be broke and be like, man, I drove an hour to go broke in 5 minutes. What am I going to do now, right? When I got good at gambling, I played the slow, methodical game where I had a very specific strategy. The strategy was very turtle-like, where I would just do one or two things, very strategic, and I'd be at the table for hours and hours and hours because sometimes it just took a long time, and that actually brought me a lot of success. It was slow, boring, and dumb, but very profitable. As far as gambling can go, it's still hit or miss, right? Sometimes you're gonna leave with nothing or what you came from, but I won more times than I lost taking that approach versus the Oprah style, just throwing everything at the market. But most traders have that former kind of sense when it comes to trading, right? They just want action. There are candles and there are colors and there's flashing lights and there's money signals and they're like, trade. After all, Akil, how can I be a trader if I don't trade, right? So if you want this action, if you want to, be in and out of trades quickly, is that something that happens on the daily or is that something that happens on the 5 minute? Probably the 5 minute, a lot more frequency. So not only do most traders fail in general, but most failing traders, the ones that have this bad mindset coming into trading, they're probably on the lower time frames because that's what's encouraged. So they're just losing money even quicker versus a swing trader who is, they could still be a bad swing trader, but they're going to lose money a little bit more slowly. So the idea that day traders can't make money is completely ridiculous. It's bogus. I was a day trader for many years. I day traded from 2012 to 2020. So I had 8 years of day trading. I was very successful. I'm still tempted to go back every once in a while, but I'm trying to free up time and take care of myself a little bit better. And that's the reason I stopped in 2020 was to free up some more time. But I know many day traders out there, retail traders. I know traders that work for prop firms, right? Just do your research and you'll see that quote is bogus. So it's funny because as soon as I hear that from someone, they immediately lose all credibility with me. I'm not going to mention the guy's name that he brought up, but if I ever were to see him in real life, I'd be like, you liar! You lie, sir. I believe nothing you say. Because it's a stupid thing, right? We as traders should never judge how anyone else trades, but I can also understand how ego gets in the way. And there are many traders and educators out there that think that, my way is the only way to be successful simply because they're not open-minded or I don't know. I don't comprehend it, but I get why it happens. Now, speaking of day trading, we do a little bit of a shameless plug before we end this podcast. If you are a day trader, right, I recommend, because of all the movement, having a setup where you can look at multiple charts at the same time, multiple monitors. If you're interested in learning how to build a setup like that, or even buying one, I got a free trading computer guide for you, 100% free. I'll put a link in the show notes below. It's what I use both times that I bought my trading computer, because I know nothing about specs and anything. So I had to figure out, what do I need in order to do what I want to accomplish on the charts. Check that out. It's a great reference guide for you to have, whether you're buying a computer or building a computer. And if you do buy one, I think you get some money off if you use whatever code they send you through the link I put below. I don't know. They're a cool sponsor. I don't have any sponsors for the show, but I have used them twice. I like those guys. So when they asked me to share it with you guys, I said yes, of course. So I hope you guys enjoyed the episode. If you have any questions or comments, either about this episode or subjects that you want me to talk about, let me know, right? This awesome podcast came to you guys because someone reached out and said, Akil, I have a question. And I said, yes, I shall answer. So you can do the same. That's what the Trading Coach podcast is for. And that's why we're consistently ranked as one of the top trading podcasts out there. So until next time, plan your trade, trade your plan, hit that like button, subscribe, rate, review, do all you can to support the show. And I'll see you guys next episode.